For a long time on Wall Street Confidential, Jim Cramer and I have been discussing how we can't really recover from all this banking and financial malaise until some company, some bank crumbles.
Right.
And today we're hearing from Carlyle Capital, which is part of Carlyle Group, that they are expecting creditors to seize all of their remaining funds, assets, about $16 billion.
Right.
Jim, is this what we've been waiting for?
No. It has to be a major.
Okay.
This was, Carlyle's very quick to say we only have 15% and all this other stuff. I want to point out that the prevalent trade to make in the last 5 years was to set up a hedge fund, go borrow as much money as you can from the banks. You could make a little bit of money by getting money at a treasury rate from a brokerage house and then investing it in mortgages. So if the mortgages were at 5% and the treasury rate was 4%, so you made 1%, that would obviously not be enough to have a business. So what you do is you borrow a huge amount and then you make it so that you borrow, to take advantage of that discrepancy, you lever up. And I don't think many of us knew it. Bear Stearns was the first to have this happen last year. They blew up because they bought really bad collateral. They were buying BBB and A paper. It's now extended to buying Fannie Mae paper, and because of the implicit guarantee but not explicit, people are really panicking. But this was a trade. I have to tell you, I probably had 10 friends who do this stuff. 10 friends who do this stuff. Anybody who had $1 billion, that wasn't equities, was doing this stuff. So Carlyle's big, but what would really be bigger was that if they brought down the lender.
Well, what about Bear, Jim? I mean, you talk about in your article there's really no protection for them at this point.
And the problem with Bears is that people have to understand the business the way it works, and I guess I did because I ran a hedge fund. But what happens is you have investors, okay, and the investors aren't as sophisticated as you are, but it's their money, and they'll call you and they'll say, hey, listen, I read all these problems about Bear Stearns. And you'll say, well, look, Bear's a good friend. I've known them for years. They've done a good job. The CEO was on TV yesterday saying that they're in great shape. And then the investor doesn't hear any of that. And the investor just says, look, if it's all fungible, if you could have your money at Bear versus Goldman, could you just please pull it out of Bear. So then you have to go pull it out of Bear. And that's what's happening everywhere. And then nobody wants to honor, no one wants to lend money to Bear because everyone knows they're pulling out. And this is what's going on right now, which is why Bear goes down every day. And I think Bear could have been taken over. I think we were very close to having someone buy Bear, and now because of this, someone's not going to buy Bear, because this is their prime brokerage business, which is the business where you custody your hedge funds, where the hedge funds put their money, and it's very difficult to stop that spiral. It's very difficult to keep Bear in business with this spiral, and it totally has to do with your investors and where they want to keep their money, and they wouldn't want their money kept at Bear, and they will call you and tell you to take your money out of Bear.
There's a lot of fear about leverage right now. We'll talk about that in another video, how to kind of maneuver in this market. Thanks very much, Jim Cramer. This is Wall Street Confidential on TheStreet.com TV. Stay tuned.
That's your action point. Take advantage of it.